Good morning, everyone, and welcome to the pre-market analysis and trade level setup for Wednesday, November the 6th. For those visiting us, this is Quantum Leap. We are a self-organized learning environment. We have a private Skype room that's been running for about 4 years. If you're interested in checking it out, you'll need a Skype account. You can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Each morning we come together and we go through a market analysis and then set up our trade levels for the ES for the day, and I give you what my hypotheses are for the day. But we need to get the disclaimer out of the way, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please trade your own plan and do your own due diligence. Okay, so the first thing that we like to do is just take a look at the numbers. We've been keeping this homework sheet for quite some time. I like to look at the macro to the micro to see where we are. You can see that we've got a new week low put in yesterday at 1750.50. That's just above what my main target was, which was at 1750 below. Buyers came in, took us up, and held us up the rest of the afternoon. And then last night we made that nice move up to my upper target, which was at 1764.50. We'll take a look at that on the composite chart. We had pretty much a doji day yesterday in the RTH. We opened at 1756 and a quarter, and we closed at 1756.75. But value increased. We held value. We talked about the last couple of days, the whole point of the last couple of days to see if they could hold value to make another run to the high. And we certainly have held that value. We got stuck in the wicks. We're going to look at that and talk about that. But we've moved up, and now we're back up in that upper value at that 1764.50. So it's going to be the same thing today. Can we hold this value at 1764.50 and move higher, accept value and move higher, or are we going to come down and try to pick up buyers at the previously accepted value? So going over to the daily report and taking a look at the news, we had Canadian building permits and Challenger jobs. Didn't really move the market much. We've got Canadian PMI at 9. We've got CV leading index and crude inventory at 9 and 9:30 for the U.S. So not a lot of major news moving events today. Taking a look at the full session high and low and the ATR targets. Full session high so far is 1767 and a quarter. Full session low is 1755.75. So we've actually got a ATR target to the upside at 1773.53. Pretty interesting considering that our all-time high and that Globex high is at 1773 and a quarter. So this shows us that we have room to hit that. And then to the low side, also interesting, is right there at 1749.50, right 2 ticks below that value that we were looking for yesterday at 1750. Let's take a quick look at the overall trend. It was funny last night, if you were in the room, I had identified this flag formation. I had gotten long on it, and as I was posting it, it popped up and it hit its target, even at the same time as I was putting it on. But we did pop up to that 64 level, and we've held that value overnight. But I like to look at where we are from the macro to the micro in terms of trend. You can see monthly trend very much intact, good slope and separation on the 9 and the 20, and we're trading back in the upper distribution of the prior month. Going over to the weekly, same thing on the weekly. We've got good slope and separation. Trend is very much intact, and we're trading in the upper wick of the prior week. Going over to the daily, Again, we had gone parabolic. We were talking about closing this technical gap. We closed the gap, and we're now holding the 9 EMA, and we've got good slope and separation. Trend is very much intact. Going over to the geometric charts, we're above the center line of the long-term upward sloping fork that we have been tracking. We're above the center line of the modified shift fork that we added a couple weeks, but we're still inside of the opposing fork and coming up and testing the upper line. So I'm looking for some type of reaction up here in the 1668, 69 area. If we break through, then I'm looking for a move up to the long-term upward sloping fork upper line at that 1780 area, which has been a measured move and a target that we've been looking at. We've got an energy point right here at 1763.38. This is not due to hit until the 9th, so we'll wait and see if we get a pop-up and then come down to test this. If we test the center line of the modified shift chart, that brings us down to that 1750 area, which is right there at that ATR and right there at that former microcomposite VPOC and CHVN at 1750. I'm expecting, again, a upward push today to go up and possibly equalize those two highs, the one at 1770.50 and 1773.25. Taking a look, let's go over to our composite chart and take a look at it. Now, for those who are not familiar how I draw my composites, we have an overall microcomposite right here that goes from 1025 to yesterday, and the microcomposite VPOC for that balance area in time is 1758.50. The CHVN, which has now become quite prominent. Within there, I always talk about where they accepted value before they made a move up and where they tried to hold value before they moved down. And I'll always draw microcomposites based on that information. You can see we broke out of the balance that we were in around 38.75. We moved up for 2 days. We held value and accepted value at 1750. Then we went up, made the new high. Okay, 1770.50 in the RTH. We went higher in the Globex to 1773.25. They tried to hold value. Where did they try to hold value? 1764.50. They couldn't hold value. They come back down. They come back down to where they started it. Okay, found value at 1750. Moved it up, accepted the value at 1754.50. Made a run up. Where did they run up? 1764. Okay, didn't quite get to the 64.50. Sellers stepped in, took us back down. Where did they hold value? They come down and hold value at 1754.50. And then overnight, what do? Bam, we popped up and we're now trading at 1764.75. Right around where we tried to hold value before. So you always got to think in terms of the auction is where they tried to hold value, or where they found value, and if they're moving up, they're looking for sellers. They're likely to find it where they tried to hold value, and when they're moving down, they're going down and they're looking for buyers, and they're likely to find them where they held value in the past. Very simplistic. You don't have to overcomplicate it if you just think in terms of the auction logic. So now we've made a move up overnight. We have accepted this value overnight. They're holding it. Overnight Globex VPOC, I believe, is 1765, and we're sitting here at 1764. We do have a gap. Another gap. I mean, this has been the last 30 days, 30 days of gaps. So we've got 4 gaps that are still unfilled, plus this new gap that we're going to create today. You can see from where we started, we had gap, we have gap, we have gap, and now we've got another gap here. And we've been stuck in these wicks. We've been trading inside of these wicks as they whip around and try to define value. But I think now that we've come back up to the 1765, we're going to open auction out of range if we stay above the high of 62 and a quarter. So I'm looking for initiative buyers to step in and accept this value and take us up to the 1767.50, which is just one tick above the what was the overnight high? The overnight high was 1767 and a quarter, so just above the overnight high, and see if we can accept that value and push to that 1770.50. Now we have a unequalization of our highs. Our RTH high is 70.50. Our Globex and all-time high is 73 and a quarter. There is a high probability that they'll go and test that in what I call equalize the two highs out. So my upward target today is still going to be that 1773 and a quarter, which is our ATR range, our 20-day ATR daily range target is 1773.50. So it's right there. So let's take a look at what happened overnight and put in our hypotheses. You can see overnight, we opened up down in around the 56, moved up, found value around yesterday's VPOC at 59 area, and then popped up and came up and then held that 60, well, it was 65, it shifted now to 64.50. So our overnight VPOC is right at the microcomposite VPOC and that CHVN at 64.50, and they're currently holding that value right now. So let's put our levels in for our trade chart. And we've got a 1755.75 as our overnight low, which happens to be, just right there at our value area low from yesterday. And then our overnight high is 1767.25, which is just below the CHVN. And our overnight VPOC I don't think is going to shift. Might shift to 65 again, depending on how much we trade between now and the open. But we can adjust that, but it's not going to be much of a shift anyway. So 1764.50, and that's exactly where we're trading right now. So, my main hypothesis is that we open out of range or just at the range high from yesterday, and we test this range high, close out this gap that we've got from Monday at 62.75. We didn't close it out. We came within two ticks of it. They test the range high, possibly push through to the value area high at 61.50, and then push up higher, come up, take out the overnight high at 67 and a quarter. We've got a 96% probability of taking out the overnight high or the overnight low, and since we're trading outside of the range from yesterday, I'm looking at taking out the overnight high as the highest probability between the 96% of taking out the high or the low. And then we've got a couple, we've got the 67.50 CHVN, and we've got these two naked crosses that still haven't been taken out at 69.75, 71 and a quarter. For those that are new, naked crosses is when the 9 EMA crosses over the 20 SMA and price action moves away from it and leaves it naked, leaves it unauctioned. It has a very high probability of going back there and re-auctioning, retesting that number. And I watch it on the 5, 15, and 30 minute for my intraday trading, but I also watch it in the larger time frames. And if you do a study on it, you'll find that it has a very, very high probability. It's very rare that naked crosses are left naked for any long term, especially when you're dealing with the intraday. So my main trade level is going to be right here at the range high and the value area high. I'll be looking for them to come down and test that, and then push higher to the overnight low, overnight high I should say, and push up through to my extended target up here here at 1773.25 for that equalization of the two. I have to worry about possibility of them stepping in at the 1750 area, so I will be watching for responsive sellers to step in at this 1750 area, possibly take out the 71, sellers step in and get a rotation back towards the prior day. But the whole key today is whether or not we can stay outside of value from the prior day and Monday and continue this upward push. My secondary hypothesis is that they run out of bullets and they come in, they've got to come down and find buyers, and they rotate inside of Monday's and yesterday's value area high, come down, take out this 59.50, come down into test the range low again from the Monday RTH low at 1750, and find buyers at the value area low, and then push up and rotate inside of the wicks again that we've been getting stuck in as they continue to coil this for another move. So the other area that I'm going to do business is down here at the 1756.55.75 level, where we've got the overnight low, the prior Monday range low, the value area low, the midpoint, the open. There's a whole bunch of confluence down here. I'm going to try to stay out of this area right here because I think there's going to be a lot of chop. So I'm either going to get short into this and hope for a continuation through to the value area low, possibly a push through down back towards that 1750 area. You get the 54 and the 50 as the two former microcomposite VPOCs. So I'll be looking for a possibility of push through on my secondary hypothesis to come down to the 1750 area, take out the overnight low and the test the value area low. Extended target below is still going to be that 1745 area where we've got those two naked crosses as well. Right now we have a naked cross at 1758.25 from overnight, and we have one at 1759. So we've got a couple naked crosses down here. It doesn't mean they have to be taken out today, but if we do get inside of the prior day range, then I'm looking for a move down at least to the 1759, 1758 area. Because remember, the most accepted price overall within this balance area is 1758. So if they get inside value and they're looking for buyers, what's the likelihood they're going to come down to 1758.50? Pretty dang hard, a high I should say, and then maybe a push through to that 56, and that's why I've got my my trade area down here at that 56 area where with all the confluence down there. Take a look at the Keltner. You can see how we line up. A test of the upper Keltner line is going to bring us up to test the RTH year high at 1770.50. If we're currently trading right at the center line, which is 1764.50, major balance right now in this upper distribution of the overall microcomposite. Testing a lower, the lower Keltner line is going to bring us down into that 1759, 1758 area. So lines up perfectly. So again, main hypothesis is to hold outside of value and push higher. Secondary hypothesis is, to break through into value and come down and test these lower areas with a possibility of, testing the 1750. And then my third hypothesis is some news comes out or the market gets revalued and we have a big sell-off today down towards that 1738.75, which is the microcomposite VPOC at 1738.75 from the balance area that we broke out of, with the 34 just below, and that would be my my third hypothesis. Take a quick look at gold. Yesterday we said the whole hypothesis with gold yesterday was to hold that 1304.30. rotate back up towards the microcomposite VPOC, which was at 1470 yesterday, with the 18 just above, and possibly a push up to test this 1323-24 area. And basically, we went down, chopped around there, and tested the the CLVN from above, came up and just rotated. And currently, so far today, they've come up and they're trading in around the microcomposite VPOC at this 1315 area inside of value. Value area high is 1317.18. Value area low is 1308. My hypothesis remains the same right now for gold. We need to hold 1304. If we don't hold 1304, 1300's getting tested, and I think we don't hold at this time. And the targets below are 92, 85, and the big target below 1768 area. But if we can, hold value here, I think we'll slowly rotate up, and the upside targets are the 24 area, the 25 is that microcomposite from before, and then a push to the other side of balance, which is that 1337 CLVN that we were using for our line in the sand when we were up in this balance here. And if we can get above that, back up to the microcomposite VPOC at 43 with 63, 66, and 87, 88 area as our main targets above. So that's what I'm looking at. Howard, over to you.
Thank you, Doug. So take a quick peek at the daily chart. Since we made our high at 1773.25, we've been in a consolidation mode. You can see that the last 5 days, which includes this current Globex session, we've come down, neither touched or nearly touched this 9 EMA, which has provided support. 2 of the days we actually tested below it, but rejected. Last night we tested to it, rejected. So the 9 EMA is continuing to provide good support, and this pattern is looking certainly more corrective than anything stronger for move to the downside. So the key level will be the 9 EMA, which currently is at 1755.75. So looking at our market internals, market breadth, we can see, here this is showing the SPY. We made our high, and since then we've been consolidating sideways. We look at the middle graph that shows the advanced decline on a percentage basis. This 50% line represents the equilibrium point for net advancers and decliners, and the lower chart shows up and down volume, and both the up-down volume and advanced declines hit their peaks on October 22nd, and since then they've been drifting lower, showing weaker market breadth. And at that high we had one peak here, but price continued higher. The market breadth has not followed with it, and as of yesterday, both advanced declines and up-down volume for both NYSE and NASDAQ. NYSE is in blue, NASDAQ is in red, have now fallen below the break-even level of 50%. So market breadth is waning, market price is consolidating. So we have some non-confirmations between price and market breadth. And as we've seen in past turning points, the advanced decline and up-down volumes tended to peak before market price did and give an early indication of at least some consolidation, if not an interim high or low being put into place. We're seeing that here now, So we'll be watching closely to see if market price does move on to new highs and if market breadth does pick up to go with it or not. And if they don't, then we could see some further weakness in price eventually. So now let's look at our sectors. Okay, we're seeing a mixture of sector performance. We see several of the sectors starting to go flat and turn lower. XLF, which is the financials, has been moving lower since back here on the 22nd, which is when advanced declines and up-down volume peaked. Utilities going lower, home builders have been going lower, technology sideways to lower. So at the same time, we're seeing retail moving higher, XLY, which is consumer discretionary, going higher, XLI, which is industrials, going higher. So we're seeing mixed performance on the sectors, which you would normally expect to see during a consolidation phase. But that goes along with the fact that market breadth is weakening. So we're seeing where some of the sectors that are showing more weakness are appearing in relation to the other sectors. Look at the Dow transports. So the transports still are in sync with the Dow Industrials. They showed a little more weakness over the last couple of days where they have been pretty strongly rising, so they've at least flattened out a little bit. The Dow Industrials relatively has been flat for a while now. So I think that's pretty much all I've got for this morning, Doug. I'll turn it back over to you.
Thanks, Howard. This is going to complete the daily homework and trade level setup for November the 6th, 2013. As always, trade well, trade safe, and we will catch you on the flip side. Have a good day, everyone.